Siddharth Bhamre joins us for his sense of what's happening in the futures and options space. Siddharth, hi, good morning. Neeraj here. Crucial days, the last two before the expiry. How would you place your trades?
Good morning, Neeraj. Neeraj, we are seeing that FIIs are not shorting index future in big way. At the same time, we are near that support zone of, I'm going to say, the good support of 5400. Plus minus 25-30 points here and there won't make much of difference for us. 5400 is here. What we are seeing is that if market doesn't stabilize today and follows what SGX Nifty is suggesting, that is around 40 points down from current levels, it will be difficult for bulls to gain confidence if expiry is below 5400. Because what people who are optimistic, and I fall into that camp, that market may not go substantially below 5400, at least in May series. You might have, certain jerk in initial part of June series, which might take you 100-150 points down, but that doesn't change the overall range bound situation of the market. But if that doesn't happen, and if suppose we close, around 5300 or below, then there would be very bad impact on the sentiments, and more than fall in the market, I feel it would be a significant fall in volumes. So what we are doing at this point of time is, because there is not much of clarity that how Nifty is behaving, and the movement which Nifty is giving is very less for intraday trading or for a day or two, except that 100 points fall which took place on Monday, we are recommending a lot of stocks on both the sides. We have some large caps where we are going long, we have some large caps where we are going short, there are mid caps which are at good support levels where we are recommending long positions. So put all these factors together, and also if I club what is happening in IVs, I don't expect major correction in market even if 5400 is breached, but we'll see lot of boredom setting into the market if we close below 53-20 odd levels.
So Siddharth, what's your sense? Where do you think the pressure would come in? Would it be banks and metals, which has been the case up until now?
I think banks won't see much of pressure from current levels. Why I say that? Because nothing has changed on the macro front for me to say that. But the way people have shorted banks, Bank Nifty, be it large cap banks like SBI, ICICI, Axis, even other PSU banks, I don't expect significant downfall in banking from current level, and you might see some kind of short covering coming at every lower levels. So these are stocks which we are identifying to, some of the names in this space we are identifying to go along. I think the pressure would more come on now on FMCG. I am not expecting, ITC to go significantly above 195 odd levels. I think HUL will find it very difficult to go above 310 levels. There are other FMCG names, though not very big in large caps. I think their pressure would be there. Realty would continue to bear the brunt. We might see some of the capital goods major who would see a good amount of selling at higher levels.
Siddharth, coming on a couple of stocks, Escomars and Ambuja Cements, and how would you trade them now?
Escomars I'm not tracking, but what I'm seeing is the related spaces like Escomars, Bombay Dyeing, Alok, these stocks are showing good buying interest at lower levels. Ambuja, what I am seeing is there's good amount of short covering, but instead of Ambuja, what we have done yesterday, we have gone long in India Cement. We have gone long around 84 odd levels. We have a target of 91 in mind, and we are fixing a stop of 81. What we have seen in India Cement is a very strong support of 82 to 84. The zone is very strong support. There are a lot of short positions standing, and you are seeing the front liners like Ambuja showing strength in market. So it is quite possible there would be good amount of short covering and some value-based buying, because India Cement as on valuation parameter is also cheap in cement sector. So we are expecting cash-based buying plus short covering to take this counter up to 91 levels.
Siddharth, anything that you would recommend to our viewers?
I would suggest look at SBI near 2200 levels or so, or before that, and India Cement is also one stock which I'm liking.
Siddharth, real estate, it's easy to say that yes, the stocks will continue to see pressure. Can you initiate a trade on any of these stocks? DLF will open with gap down. So let's assume it opens at 207, 208. Is there a trade you can initiate on any of the real estate counters?
Neeraj, it's easier for me to say that yes, we have initiated trade around 228, but I can't, prove right now to you. But what one has to do in such markets that identify sectors where inherent weakness is there and the trend is there. So when you get a bounce back, so when DLF bounce back from 210 to 225, 230 odd levels, rather than going gaga and expecting targets of 260 odd levels, you have to identify, when to short it. Now already you will see that there's stock is going to react to its negative results. We had a target of 211, we'll probably book profit today. Already stock would open, below 205 levels. Then I won't have courage to go short because my risk reward ratio has gone completely haywire. Again, in other realty spaces also, yes, I want to go short in India Bull real estate also. But again, that stock is very much near to support levels of 100, 105. So when these stocks bounce back from their support levels and they come to, not to probably a very strong resistance, but certain higher levels, that is the time actually to go short. Now banking has come down now to support levels. If you see ICICI Bank, SBI, Axis Bank, these stocks are trading at long-term support levels. So now one should not go and short them. It is time that you do some contra buying if at all you have a view that the market would be range bound. So it's not a short time to go short in DLF at 205 or 206. If at all in say week, 2 weeks it bounces back to 220, then you start identifying levels where you should go short in DLF.
So that before we let you go, any of these stocks that you may be tracking, Sri Renuka, Aurobindo Pharma, or even a Bharat Forge?
I think Bharat Forge reacted negatively to result, though I'm not tracking very closely that counter. Aurobindo Pharma, again the same story, this good amount of fall which we saw in that place. Sugar stocks, Renuka has seen a lot of short formation. It is, though the yesterday's rally in most of the counters, be it Balrampur, Bajaj or Renuka, has been because of short covering. I think there might be some bounce back which would continue for some time, which may not lead to generating any trade, but unless and until you don't see formation of long position, we should not get gung-ho on this space, because overall we are seeing commodity prices across the board correcting, and it's not going to augur well for sugar counters as well.